Good morning, all. I'd like to begin by welcoming members to the Pension Fund Investment Subcommittee meeting, including members of the public watching by the Council's YouTube channel and local pension board members observing via Zoom. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is taking place? Please note there is no fire alarm test scheduled for today, so if the alarm does sound, I will adjourn the meeting and we will make our way downstairs and out to the main entrance. The nearest fire exit is through the middle doors to my left. The muster point is in the car park. And hopefully that won't happen. Dawn, do we have any apologies?
We have apologies from Lee Fanco. I haven't heard from Councillor Bowden.
Thank you. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest?
Yes, Chair. John Walker. I'm a retired member of the scheme. Son and daughter-in-law are both deferred members.
Thank you, John. Right. So we're being asked to approve the public minutes of the subcommittee meeting held on the 23rd of February 2023 as an accurate record. Can I ask if any member who does not agree with the proposal to raise their hand now? Okay. See nothing, no objections. So the proposal to approve the minutes as an accurate record. So we will take that as carried unanimously. Okay, we move to item 3, the action log. Officers, do you have any comments or updates?
Thank you, Chair. Yeah, I'll just update on the outstanding items. There's only 3 there. The passive equity options, which you'll see in the table. There'll be an update paper later on in the agenda today, which will around the implementation of passive equity options and how that's going so far. Private equity review. So the fund has completed the submission of subscription documents for the HarbourVest 2023 Global Fund, with first drawdown expected later this year. So that will remain on the action log until we're happy that's gone through. And then the final outstanding point is the property portfolio review. So we'll soon be sending around something to members. In fact, you might have something in your inbox already. For a date likely to be the last 2 weeks of June, where some options on long lease managers will be presented. And then we'll look to move on from there and actually choose someone down the road a little bit. That's it.
Thank you. Members, do you have any questions on the action log? No? In which case we're asked to note the action log. We're willing to do so. Thank you. Item 4 is petitions and public questions, but we have received no petitions or public questions, so we'll move on to item 5. Oh. We will now consider the Cambridgeshire Pension Fund Investment Monitoring Report for the quarter ended 31st of March 2023. Can I ask James Thurgood of Mercer to introduce this report?
Thank you, Chair. So what we've got here is the investment performance report to the 31st of March 2023, and diving right in. So if we're on page 14 of the pack, or if you've just got the report, it's page 3, just going to go through kind of the key points of the executive summary. I wanted to start with just a bit of market background and what happens over the quarter and last year. So just looking back to 2022, that was basically the worst year for markets on record, with equity markets down, bond markets down, and that was all around, the coronavirus situation, the Russia-Ukraine conflict. So kind of with that backdrop going into 2023 and the first quarter, thankfully it was actually kind of a better story there. So we did have, you may have seen in the news, Silicon Valley Bank. So that's a US bank that lends primarily to tech companies. That collapsed, and that was the second largest kind of US banking collapse ever. So quite significant, and it was definitely felt in markets. But despite that, there was kind of poor performance from financials as fallout to that. But other than that, kind of it was more of an isolated incident as opposed to a kind of wider financial contagion, which was the worry initially. In terms of exposure to Silicon Valley, there was, I think the Blue Bay multi-asset credit portfolio had exposure to one bond, 0.5% of the portfolio, or less than 0.5%. So very like minimal impact there. And then kind of the wider concern is, okay, how does, you know, the rest of the portfolio react, and particularly the equity managers, which we'll kind of get on when we talk about the performance. Over the quarter, most developed market banks increased interest rates, and kind of were able to keep inflation under control, with the exception of the UK, where inflation is still the highest among developed markets. And actually earlier this week, the inflation numbers came out and surprised on the upside. So inflation has fallen, but lower than kind of markets were expecting. So kind of that's definitely one to keep an eye on over kind of the coming months and throughout the year. So kind of moving on to the dashboard and what's happened specifically to the scheme. So the funding level increased over the quarter. So we're now at 152%. So that funding level is the ratio of assets to liabilities. So that increase was driven by kind of the dual effect of the assets increasing as well as the liabilities decreasing. So kind of that's the key metric really by which we measure how the fund is doing, and kind of obviously pleasing to see that the funding level is strong. Looking at the asset allocation, so over the quarter there was an investment into Schroders gilts, so Schroders government bonds of 35 million. And there was kind of an overweight allocation to equities versus the strategic benchmark. But one thing to note is that we've agreed a new strategic asset allocation, and that's going to be reflected from the reporting going onwards. Just pause there briefly, otherwise I'll kind of touch on the performance. Is there any questions? The funds underperformed benchmark over the quarter. The key contributors to that were firstly the equity protection strategy with Schroders. So actually, as agreed at the last committee meeting, where that kind of strategy, which is an overlay on the current equity portfolio, is going to effectively roll off at the 31st of May. So in 5 or 6 days' time. And that's not going to be reintroduced. So that's obviously worth noting. And then in terms of what else drove the underperformance, so there was underperformance by Joe Hambro. So they were overweight to kind of US mid-cap companies over the quarter, which, given kind of the wider market background, and in particular Silicon Valley Bank collapsing, they underperformed and didn't perform very well. So when they're overweight something that's underperforms, they will in turn underperform. But they haven't made any changes to the strategy over the quarter, or no kind of wholesale changes. They are looking to add some growth type stocks to the portfolio, but are doing that on kind of a more opportunistic basis. And then also worth touching on Dodge & Cox, and kind of similar story, that whilst they had no Silicon Valley Bank exposure, they were exposed to the type of stocks, i.e. financials that would that were impacted by kind of the volatility, and so they underperformed as well.
Thank you, James. So I think James will know what I'm going to be asking, but I think it's really important to note with Dodge & Cox that they have exceeded in terms of performance on the benchmark which we measure them against in terms of the value index. So it's almost a sort of a strategic allocation point which has driven that underperformance at that level.
Yeah, you're exactly right. So Dodge & Cox are a value manager. So we kind of assess them against a value benchmark kind of over short-term time periods. And that value benchmark, they did outperform. When we kind of calculate kind of total scheme performance, we assess them against the MSCI World. So I think basically that there are a few ways that you can kind of look at a manager and say, okay, how have they done? And you can use different benchmarks. And in this case, we're saying that over the short term, over the quarter, they've, as Mark said there, outperforms their value benchmark, but underperforms the kind of wider MSCI World benchmark. I didn't have anything else on the performance report unless there was any questions, any other questions?
Members, have you got any specific questions you'd like to raise? I'm seeing nothing around the room. It's interesting looking at the funding levels and sort of seeing 152% funding level. However, that seems to be driven primarily by the valuation on the liabilities. So thank you for that. Members, if you have no questions there, then we are being asked to note the report. Are we happy to do so? Thank you. In which case, we will now move on to item 6, and we will consider an update on the stewardship and engagement. Can I ask Ben Barlow, Funding and Investment Manager, to present this report?
Thank you, Chair. This is the second time we've brought this report to the ISC. So the first time we brought it was November 22, and it will be a 6-monthly report that we're bringing going forward. So this is the second time we've seen it. The report focuses on 2 key areas: the voting that has taken place by our active managers, and also the engagement that's taken place. So those are the actively managed equities. On the voting side, the table within 3.3, which is page 32 of the pack, shows an update on voting done by fund managers in line with the guidance. So the report would normally stipulate where that's not taken place and why, but happily for us, all votes in this period have been done in line with the guidelines, and they're the access guidelines. I'll come to some examples in a minute, just to put some reasoning to what you normally see from these engagements. I think it gives it a bit of a colour. But in 3.3 table, you'll see there was 304 votes cast by the investment managers of the 3 access sub-funds in which Cambridge, in which we invest. So that's Dodge & Cox, J.O. Hambro and Longview. Of the votes cast, 221 were for, 72 were against. These are management proposals. And there were 11 instances where votes were not cast or managers chose to abstain from voting. UBS, as a passive manager, don't actually have to adhere to those access guidelines because their funds are not actually within the pool itself. They are they're not there in the same sense. So that said, we do have quite an in-depth report from them, which is an annual report about their highlights program, and that's quite a substantial document. And that's another story of this report, is there's a lot of information which we can obviously get if you need it, but if we were to put it all in the appendix, this document would be about 40, 50, maybe more pages long. On examples, a lot of the voting that's taken place, get the right, bear with me, I want to get the right slide, is around just move on to engagements and I'll come back to my examples of voting. I do have them. So if I refer to, so this is around the engagements, this is the ongoing engagements that managers are doing and conversations that are ongoing over a number of things, usually in the ESG field though. So I'll refer to table 4.2, which is on, again on page 33, so the next page along. These pages have examples, including from fund managers and also LAP engagements. So the LAP ones are the full LGPS world. And again, I'll come to some examples in a minute that will give some flavour around the types of things we're seeing. So, for instance, one of the engagements, Longview has been engaging with an American bank. Unfortunately, it's hard to actually detail the companies. I can't name any of the companies that the engagement's going with, but you may know from your own knowledge who I may be talking about. So I'll try not to signal too clearly who these people are. But Longview have been talking to an American bank who didn't set any net zero targets. They're very much an outlier against the market. Other American banks do seem to have those. It's a regular request that's going on. It's an ongoing conversation which we can see Longview are having, and they're letting us know about. And they're also approaching other investors in that particular bank to just build pressure to say, look, you're not doing something the rest of the market is doing. And that's the sort of engagement we'd like to see. Another example is J.O. Hambro talking to a liquid gas supply chain company. And in their words, they said, following our meeting last quarter, we have written to the Director of Sustainability and Marketing to reinforce our key priorities for the company's forthcoming disclosures, including on climate change. We provided a sample of detailed investor user examples of TCFD and Scope 3 reporting to highlight good practice. So they're trying to show what is expected of the investors. And again, this is their knowledge is against what they're seeing in the market. This is especially relevant as the company seeks to enhance investor understanding of its strategic refocus in support of the transition of the energy sector. So yeah, this example shows that the fund manager is helping to improve the sustainability reporting and get this company in line with the market with scenario and Scope 3 based reporting. And it's a familiar story across engagements. Usually the investors or the fund managers on our behalf are saying, look, you're not doing something that the rest of your market or your area is doing. And they're on with, we're getting the reports of these ongoing conversations that are going on. To give you an example from a LAP engagement, so LAP met with an American burger restaurant chain. Won't say who that is again, but you might be able to guess. And they've been requesting the findings from a water risk assessment study. The company in question has not released the details of that study yet, but the company, from pressure put on by LAP and other investors, to be fair, have now been included in a benchmark which will measure performance against, and this is a water purification and water safety benchmark. So now they're on that, they've got something to test them against, and they can then obviously work to put more pressure on to get these full results disclosed. So again, yeah, there's lots of information examples which we could have put in the appendix, but again, it would have made it a very long report. So we're trying to pick out the stories here. As I've said, it's only the second time we've brought the report. So if you want us to bring out more, I'm happy to do that. But really, we're just trying to bring out the flavour of the types of engagements and voting actions we're seeing. So the report is to note, sorry, on voting, I seem to have lost one of my slides on some of my examples, but usually what we're seeing is, and we haven't seen any against the guidelines, but normally what we're seeing is the guidelines are quite clear on things like if you're taking a new CEO into the company, sometimes, and again, we haven't got any against the guidelines here, it might be that a company sorry, the fund manager has said, yes, we've got no problem with this new CEO, but the guidelines might say you can only take on a CEO if they've got a certain amount of experience in a certain field or something like that. But in this occasion, we haven't got any against the guidelines. The report is to note, but I'm happy to take questions.
Members, do you have any questions around the reporting? Yeah. Adele?
Yeah, I always get worried when I see extraordinary general meetings. Do you know why these meetings were called? Sorry, it's 2.4. And it would appear like it's Dodge and Cox because it's mentioned again at the bottom, and they seem to have had a lot of meetings.
We will certainly have the detail on why those meetings were called, which I can pick out of the numerous pages of appendix we've got back at the office. So that's not a problem. But again, you know, anything that was a concern, we would have pulled out in the report. So there won't be any. I know they're called extraordinary meetings, but I wouldn't have thought there's anything in there that raises any red flags. But I can certainly pick that out and come back to you on what those particular story might have been behind those meetings for Dodge and Cox.
Yeah, thank you.
Kathy?
Just to say how much appreciate you putting a bit of colour on the interactions with companies, and that it really is important that we appreciate that they are real interactions about real issues, not just paper box ticking exercises. So yeah, thanks for that.
Yes, it certainly is the case that I actually see some of the alerts that come out from that. And of course, they're very much around items that we've talked about around the governance, as well as all of the environmental issues. So it does cover the whole range. That's very good. Thank you very much, Ben, for bringing that in that format. Are there any other questions? So, thank you very much for that. We are being asked to note this report, and I assume we're happy to do so. Thank you. Move on to item 7. The following items on the agenda are exempt from publication of the subcommittee. We'll need to decide whether to exclude the public and press from consideration of the following items on the grounds that the reports contain exempt information under paragraph 3 of part 1 of Schedule 12, Local Government Act 1972 as amended, and that it would not be in the public interest for this information to be disclosed, information relating to the financial or business affairs of any particular person, including the authority holding that information. May I ask if there is a general consensus in support of the recommendation, so that the subcommittee can take it now, or if anyone disagrees? That's fine. Thank you. The committee has resolved to move into private session. We will now close the public part of the meeting and stop the live streaming via YouTube. The next meeting is on Wednesday, the 13th of September, and thank you anyone who's been watching.